Again, Fantom tied with a partnership to Google. What does this partnership mean? Will it help Fantom in its price action? The crypto market is reeling here today. Bitcoin down 2.15% after Jerome Powell and the Fed yesterday delivered us an almighty rugging. Guys, if you haven't seen my video from yesterday breaking down exactly what went down, you're going to want to watch my 8 to 9 minute summary video I posted last night. Make sure you get caught up on that, because this is going to have huge ramifications over the next couple of weeks and explains why we could be heading for painful targets to the downside. I'm going to try to break some of those down for you, but let's kick off with this news on Fantom. Fantom, mentioning here the Fantom Foundation tweeted Google Cloud has chosen Fantom to integrate into their public blockchain data. There's a lot of people messaging me asking me, what is going on here, guys? This must be huge, right? Well, I wanted to break down exactly what is going on here. So actually, Google Cloud's blockchain data has now partnered with 11 new chains. They're building this thing called BigQuery, right? If you imagine, what is Google? Google wants to index the whole web, and now they want to do the same for Web 3. In other words, if anybody wants to query, right, ask a question. Query means to ask a question of Web 2. You go into Google and you say, what is the age of some celebrity? And you type it in and it will give you the age, right? You can do that straight on Google. So for example, you can go into Google and say, what is the age of LeBron James? And it will come up here as 38. It's because they've indexed the whole web to be able to pull out this data. They want to now do the same for Web 3. But in order to do that, they need to plug in as many of the top demanded blockchains as possible. So this isn't a massive piece of news for Fantom. I don't want people putting this out of context that it's a massive partnership and Google picked Fantom out of everybody. No, that's not the case. They want to plug into as many blockchains as they can. So they listed the 11 here, includes Avalanche, Arbitrum, the layer 2 on Ethereum, Kronos, Ethereum, Fantom, Near, Optimism, Polkadot, Polygon, and Tron. But again, it is a nice vote of confidence, right? It's a nice vote of confidence that they're being put here in the top 11, despite its market price being much lower than that right now, right? Fantom's really taken a beating here. Of course, the multi-chain saga not helping Fantom in its price action here during the bear market. But like I've continued to maintain here, guys, for me right now, where the price of Fantom sits is irrelevant. The only thing that's irrelevant for me right now, when all altcoins are retraced, is this a project I want to hold going into the next bull run? And I've made my personal decision that this is indeed something I want to hold into the next bull run. If you look at the Fibonacci ratios here, we're sitting right at the zero level, right? We're sitting right there at the bottom level, coming up to kind of some of those lows we faced in November of 2022. But if you look at the risk to return, when you look at this, for Fantom just to get back to the Fibonacci golden pocket of 0.618 to 0.65, we're talking a $2.22 to $2.33 return just to get back to the Fibonacci ratio. To get back to all-time highs, then you're talking Fantom back at $3.30 in that kind of range, obviously getting up to the peak there of $3.49. Fine, that's a great risk to return. And then Fibonacci extension at the 1.618, we're looking at $5.50. So for me, looking at these kind of, in my perspective, quite conservative price targets, it has a nice risk to return. Now, would I be going ape into Fantom? No, but you guys have known that from the start, right? This is a small slither of the layer 1 section of my portfolio, and I continue to think it's an undervalued blockchain. It was undervalued in the bull market. Obviously, it's taken a battering here, as many other altcoins have, right? I mean, Fantom's down 2% today, but look at Ethereum, down 2.57%. So there's nowhere to hide in this market. Solana down 4%. Everything is getting a battering, and for that reason, you cannot just look at the red and say, oh, this is a bad project. Right now, if you're talking about medium to long-term investments, your technical levels really don't matter. You really want to ask yourself the question of, do I want to tie up my money in Fantom or in any given project when we're going to head into the next bull run? Because the opportunity cost is that money which you put in this project could have been in another project, because we know when the bull run comes, loads of projects are going to run. The question is, are you backing the right horse? And that's what you've got to decide now. Doesn't matter what happened in the past, right? That's a sunk cost fallacy. It's happened. It's over. Just decide, where do you want your money parked now going into this next bull run? And that's what you got to decide. And if you have conviction, you DCA. If you don't have conviction, stay away, because you're just going to panic sell if it dumps any further. So jumping back into the charts here on Bitcoin, look, the reality is yesterday I said, guys, watch out for this, right? We are running here trying to reclaim the EMA ribbon, but we didn't have enough impetus, right? If you look at this, we tried to close above it. Well, we did close above it on this candlestick here. Yesterday, which is where the conference was, we got a red candlestick closing us back inside the EMA ribbon, and now it's clear that we've just been rejected from the EMA ribbon. And this is exactly what I was warning about, right? A lot of people getting really, really excited that, oh, look, we're going to start moving to the upside. I said, guys, first we're going to get above our EMA ribbon. There's a chance we get rejected. Then we need to break above this peak here. Remember this candlestick? This candlestick wicked as high as 28.1, but we still got thrown straight back to the downside. So we got resistance there as well. Then we can start saying, okay, things are looking exciting. We got a nice W pattern, but that didn't play out, right? Instead, we're getting rejected from the EMA ribbon, which is what I held the bias as. I said that. Now we got to look for support. And the first major support on the daily chart sits at 26.2. So 26.2 is what I'll be looking at. You guys know the way I have been monitoring this whole pattern really over the last few weeks is this. It was this big channel which we broke down from. First price target is the first pivot point at 24.8. We touched it on this weekly candle here. And then if we lose this, then we start worrying about the next price target at 20,000. But for now, those levels are still in play, right? We're still riding above the 200 exponential blue line here, which is a 200 weekly exponential line. We're managing to hold above it. But now the resistance is going to start to come in, right? The resistance is going to come in from the weekly EMA ribbon, and the bears are going to try to do their best to send us back down to 24.8. The other key thing to note is right now the dollar index continues to be powerful, right? It started off this week in the red, and it's turning it straight back into the green, posting its 10th consecutive here positive candle. And it's a pain, right? If you look at this EMA ribbon, it's flippening. It looks set to go higher for longer. And this has only been worsened by the situation yesterday. What we had primarily yesterday was the concerns around the summary of economic projections. Because in the summary of economic projections, Jerome Powell and the Fed further doubled down that what they're going to do is not cut rates as much as they previously indicated in 2024. Previously, they indicated that we'd end up Fed funds rate at about 5.6 by the end of this year and bring that down to 4.6 by the end of next year, 2024. They revised that. They said we will still end up at about 5.6 by the end of this year, but we're going to revise that to 5.1 by the end of next year. So they've removed 50 basis points of rate cuts next year, and markets are not taking that positively, right? Risk is rotating firmly off. There is very little benefit to be in high risk plays right now, and that is why if you switch over to the traditional markets, you are seeing the Nasdaq also getting hammered today, down 1.16%, S&P down almost 1%, and the Dow Jones down 0.4% roughly. This is being caused by the risk off appetite. We're also seeing that the US 10-year Treasury has risen to that 5.1 mark, right? Because that is the exact Fed funds rate being projected for 2024. So what we're now seeing is that you can go park your money in the US 2-year Treasury, get 5% return without taking any risk, because giving your money to the US government is considered the risk-free rate, right? So normally, if you take the S&P on the average year of the last 20 years, you're talking a 7 to 8% return, but you're taking risk. Here, you can park it in the 2-year Treasury and get 5% risk. So the average investor is out there going, why should I take that risk? I can leave it with the government for 2 years and I'm going to make 5% of my money, much better than I'm getting at any savings account with a bank, all whilst taking no risk. Equally, if you look at the US 10-year, which is phenomenal, you can leave your money tied up with the US government for 10 years and get 4.46. So these yields are really skyrocketing, guys. If I zoom out here in the chart, you can start to put that into perspective to see how high these are. I mean, these are now past the peaks we saw in 2022 and very high levels here on the US 10-year. Similarly, the US 2 years at highest levels we've seen since 2006. Okay, so this is an incredible rotation to risk off, and no wonder why just today alone we have seen $21 billion decimated out of the crypto market, right? Flown out of the crypto market in just today, right? So it's been a really, really powerful day for total, falling 2%. Money is flowing out of Bitcoin, flowing out of altcoins to more stable asset classes right now. Now, for me, doesn't make a difference, right? I'm looking to buy the dip. I'm going to look for those dips and look to jump in as and when those opportunities present themselves. For me, I'm more excited if we lose 24.8. Remember that price target I was telling you guys? That 24.8 neckline is the exciting bit for me. If we start losing this neckline and play out a nice big M pattern here, breaking to the downside, I think that's when we can get that fear. That's when the market's going to be fearful. That could be that final capitulation down before the Bitcoin halving next year. And that's where I'll be looking to accumulate. Other news, guys. We also had the Mt. Gox pushing back their repayment deadline. Those were scheduled to make those payments in October of this year. They've now pushed those back to October the 31st, 2024. Seems like a coincidence that they're waiting till after the halving, which could be quite important. So we'll make sure we'll look out for that again. I don't suspect that's going to be a massive hit on markets. I think markets will absorb it and it'll be quite positive. I don't think everybody's going to dump it straight away. So there you have it, guys. If you appreciate type of content live and direct, as and when it matters, smash up the likes. Don't forget to subscribe, and I'll see you in the next one.